And I just real quickly, Dennis, your strategy, correct me if I'm wrong, but like you look at them and you try and gauge them, but you don't try and run with them. You would rather see what everybody else does and then go for the fade because the
Yeah.
fact that they may flip on you,
Yes.
right?
Yeah.
Right.
You will see algos try to run with it, and then you'll see them get chopped up in the last minute when they all flip. So it used to be, if we go back, I've been trading imbalances for 20 years. So I got some experience trading imbalances. If you go back 20 years ago, they didn't have the whipping, flipping, and, the algorithmic action that it did before. So you could, go with it. They used to come out 340. They used to come out 20 minutes early. Then they were 345. Now they're 350. As the markets and algorithms have taken over, they keep making the imbalances later and later and later. So the human participation in it isn't as strong as it is. But the safest way I feel to play it is, if you don't believe the numbers at 350, which sometimes it can just they can flip. One institution comes in, it can all change. It can pair off. I mean, there's so many different reasons why, what you see at 350 might not be real. But I always throw out the LOC orders just in case. So if they want to gap up or run these stocks ridiculously in the close, then I'm, maybe willing to, sell some stock. So, so I throw out LOC shorts, limit on close orders. Yes, the evil short seller. What the shorts do is they provide liquidity to the overall market. Without those orders, those gaps would be much higher. It's not just me selling short. It's every professional trader selling short. It's hedge funds selling short, into huge buying blocks. When they've got to buy a big block, they throw out. The reason they disseminate this information, it's an advertisement to people who subscribe to the platform that we need sellers. We have a huge buyer here. This price is going to go a lot higher. We need sellers to come in willing to provide liquidity so we don't impact the price as much. Those sellers are short sellers that will come in to provide liquidity. Without them, those gaps could be much stronger. But, you think, I'd like the market higher. A lot of times they're sell imbalances, so the gaps down would be much weaker. What the liquidity providers do, the short sellers and the buyers and the market makers, is they, come in and they provide that liquidity, and those moves aren't as strong as they would be for that reason. So you don't get this crazy volatility typically on the close because the traders are there to provide liquidity. Traders serve a purpose. Short selling serves a definitive purpose of providing liquidity in the markets and muting those extreme price actions. But even on Friday, there probably isn't enough short sellers, and that's why you're seeing so much strength there on the close.
And what about, and this could happen in any stock. I can remember a few years ago, Dennis, I don't know if you remember, and you ended up writing it up or taping it. Like there was a huge imbalance in Coke, and it was one way, and then it flipped another way, and then I'm not sure if it flipped back or not. You remember what I'm talking about?
I don't remember that one, but
Yeah.
I'm sure there's been a few of them.
But you were like, you scrambled your, somehow you avoided a major disaster, but it can happen in any stock. I mean, you just have to look at the stock and what the what compare what it is to the to the volume. A couple 100,000 shares in Coke as opposed to a couple 100,000 shares in such a thinner stock. And I still don't get this. We've been talking about this for, I don't know, 10 years. These guys, they need the last print. This is how they're marked. And I just don't understand it. Like if I knew I had 200,000 to sell or 200,000 to buy, and I knew it at 240 or 230, man, there'd be a lot of other ways to work out it. But that's just a market structure thing. Maybe we can talk about that with Tim when it comes on. But you talk about tip in your hand. I mean, holy cannoli.
Yeah, when you're throwing those huge imbalances out there, and they do impact price. A lot of days they don't, but some days they do.